Well, hello there, and welcome once more to the Open Door Show from Property CEO. It's good to have you here. I don't know whether you're watching this on YouTube or you're listening to it on the podcast, in which case you can't see us. You're missing out. What a great thing it is if you could see us as well. But hey, either way, I don't mind. My name's Richie Clapson, if you didn't know, and it's great to have me here with us today. And over the next 30 minutes, I'm going to take a deep dive into the world of small-scale property development. Always we're talking to movers and shakers, people out there in the industry that you need to meet, you need to know about, people that can give you that information that will help you on your small scale property development journey. And sometimes people you never thought you needed. Well, today we're going to have a bit of fun, okay? It's not necessarily a fun subject. It's about insurance. You're thinking, fun? Insurance? What are you talking about, Clapson? But actually, you've got to make it fun. Life's far too short not to. And insurance is so important. You get the right insurances in place, that means you'll always have fun. Without the right insurances, what if it goes wrong? No fun at all then, is it? See what I'm saying? On today's show, who have we got? Well, back by popular demand. About 7 months ago, we had this guest in, and actually a lot of people come to us. We had a huge amount of comments that said, bring him back. And I thought, really, no, surely not. No one wants him back. But you did. Today, on today's show, we've got Josh Munt from the insurance desk, a good friend of ours here at Property CEO. He's been in the room. He's worked with some of our students. He's working with our students who are on this development journey. And actually, yes, insurance can be a dry subject, but we make it a bit of fun. So, Josh, are you there? Welcome back, Josh.
Thanks very much for having me. Another fantastic intro, as always.
I'd like to build you up, my friend. I'd like to give you a little bit of something that maybe you don't get from the rest of your team in the office.
No one else does, so it's a pleasure to be on.
Once every 7 months, come back and we give you a little boost, a little bit of upbeat intro just to your world. If you want, Josh, we could record this and you could play that every day as you enter your office, and your team could then clap at the end.
What a motivator.
Josh, we had you on 7 months ago. We talked about insurance. We talked about various parts of the insurance. You subsequently, after that, came up to work with us in Birmingham with some of our students. I know quite a lot of our students are subsequently engaged with you, and you're really sorting out some good insurance stuff for them. We're talking today because we want to go on a slightly different subject. We want to talk about JCT, Joint Contracts Tribunal contracts. This is the contract, for those that don't know, that we're going to put in place as developers between us as a developer and the contractor to deliver the project. And of course, these JCT contracts have implications on insurance. So we're going to be discussing that. But first of all, Josh, some people won't know you. Can you introduce who you are, what your background is, and what your company is?
Yeah, perfect. So my name's Josh. We work for a company called Insurance Desk Services. We are an independent broker. We specialize in particularly property, construction, liability, and lots of commercial style risks. Now, like you said, insurance is a very dry subject a lot of the time, but it's such a fantastic way of de-risking your business. I mean, business is all about us making money, making profit, and we don't always think about when things go wrong. So it's a very important tool to have that protection to get you back to where you were as quick as possible. Now, it can be a minefield, so it's really important to come on to channels like this to discuss ways in which you could potentially not have known about to make sure you've got that maximum cover.
Yeah, it's so important. And how long has the insurance desk been around?
So we've been around for approximately 15 years. We've got lots and lots of experience, and we've just grown and grown, really. And as we try and help as many property investors, developers, any clients, we just trying to get a lot of content out there and just trying to demystify, I suppose, the world of insurance.
Yeah, as you say, it can be a dry subject, but it is so important. Great people at Insurance Desk. I know some of Josh's colleagues there, and I've known them for quite a while, and I like them. They're people you can deal with, and it's about people dealing with people. So we got to get our insurances right. So we're talking about JCT implications. What do I need insurance for, Josh? Let's open this discussion up. I'm going to have a JCT contract with myself and my contractor, between the two of us. What's this insurance for?
Yeah, so JCT is more of the contractual term rather than an actual insurance product. It's just stipulates within that contract on how you should insure, and that's the really important factor. Many owners will think, right, okay, I've got a property, I'll insure it. Great. They'll get a contractor in to do some works. They'll have their own cover. But actually, within that JCT, you're going to sign contractual clauses, and there are bits about the insurance. And there's usually about 3 different ways that you could structure your insurance when you're signing a JCT with a principal contractor.
Wow. So what we're saying then, just for people to understand this, the JCT is the actual contract. That's not an insurance document. That's just a legal contract for the supply of services, potentially for a fixed price, if it's a fixed price lump sum contract, from your contractor to you. Yes, we probably understand we need insurance, but what you're actually saying, the JCT itself specifies exactly how that insurance needs to be. And I'm assuming if the insurance isn't right, maybe you could expand on this, it almost is invalid. But tell me what these 3 sort of options are. How does this work?
Exactly. And it's trying to maximize protection for all parties involved, because if you're not part of a contract, you can't claim off of it. You can't take the proceeds off of it. So if you've got 2 different entities covering 2 separate risks, when there's a claim, it becomes very difficult. You've got lots of complications on insurers. Have I insured that amount correctly? Does it fall to the contractor? Is it mine? So the JCT can bring in clauses such as putting it in joint names. So it could stipulate that you need to have a policy in joint names with the contractor, either for the contract works only, or if there is an existing structure there, so you might be building an extension, then you have the existing structure and the contract works both in joint names. There's another stipulation that puts it in there that you could either do that under one policy, so you don't take separate policies with additional notes of interest. You take it together. Your joint insurers, your sort of co-insured, composite insured, and there's one insurer covering the whole risk. That is the safest way usually to do it. And then they've added a sort of another means clause within JCTs. So they appreciate that these covers can be costly. Sometimes there's implications where they're tricky to actually get the insurance. So it will allow owner, contractor to insure by other means, which will be that they will keep themselves separate. That is generally a way people try and do it, but it can be risky doing it that way.
Interesting. So in terms of insuring the building, let's talk about a conversion of a commercial building, which is where we often focus new developers to go because it minimizes risk. We've got an existing commercial building. When we buy that building, it's vacant. So I'm assuming we've got to insure it at that point.
Mm-hmm.
No contractor on board at that time. We're going to do some major conversion works to turn it into residential. Contractor on board then. So that's where this complication of insurance comes in. Contractor finishes, hands it back. It's for sale, but empty. I'm assuming we've got to insure it then. And then slowly you sell some of the units, and there's sort of crossover between customers, eventually end users buying it and insuring it, and you. Is that one policy that goes all the way through? Is that all split policies, or how does that work in the way you've just described it with named, beneficiaries on the insurance?
Yeah, great question. I mean, there's very limited amounts of policies that will cover you for the whole chain through from start to finish. Now, there are some that you could start with an unoccupied property. You'll mention that the works are undergoing eventually, and then once they're ready to start, you can amend the covers. It continues, it adds the contract works cover in, and then it continues until the contract is off and it's back to an unoccupied building again. Or the most common types will be you'll take a specific project policy. So you'll either cover the unoccupied buildings until the works are ready to start. You'll have to cancel, move it onto a specific policy. That will cover you for the renovation project. Once that's finished, you then go back to the unoccupied buildings. But there are multiple ways you can do it. So I will always say speak to a specialist to structure it in the best way that you possibly can. And it's a lot better if you're engaged with a contractor.
Yeah.
Because if you're speaking with a contractor, they will be much more open to, discussing insurance provisions with you rather than just trying to rely on them doing their own thing.
And does our contractors, if we're doing this main contractor fixed price lump sum, we're maybe talking a minute about not my preferred route, but what if you were contracting your project yourself? But let's assume we've got a separate contractor. When they do the works, you have got an insurance on the building for the works taking place. But does that contractor have to have their own insurance as well?
Usually they'll take their own policy. So this is where there's multiple options, because the contractor can add on an extension to cover your interests in the contract works.
Yep.
So you're not taking a separate policy. If they can't, then that's where you'll go down that route and take a specific policy for the contract works for that specific project. And that can either be in joint names or it can be in the contractor's name only. But if it's in the contractor's name only for the works, you're relying on them claiming through their policy. You can't claim off of their policy because you're not a policyholder.
So if the contractor had a major problem and he set fire to the building, and to be honest, I've been there once before, so a real scenario, and the contractor has to claim off his policy because you're not named as the developer, and let's say at the same time, and this didn't happen to me, but thankfully, but if that contractor say went bust, then you presumably you're left with a burnt down building with no insurance cover.
Exactly. It's very, very dangerous. So
that's good news, isn't it? Hey.
Yeah. So this is why I would say when you're putting it into joint names, you then have a control. You have the rights to that policy. You can claim under that policy. And should it be that the contractor has either been taken off site because they've done a rubbish job, or they've gone bust, or there's an issue with them, you can assign somebody else onto that policy so it keeps it running. You're always that policy holder. Whereas if, contractor, or there has been an incident where, well, there's probably been a lot, but there was one in sort of Kensington, I think it was, where the contractor was doing a basement conversion. They were insured just with a generic policy. They hadn't declared they had previous CCJs. It happened that the basement fell through, the whole property fell in on itself, but the contractor's policy refused to pay out because they didn't have the correct cover. So
because they hadn't declared the CCJs, their cover now became invalid.
And because the owner wasn't privy to that contract, they didn't have the rights to take, well, there wasn't any proceeds from the insurance anyhow, but they would have potentially been separately insured if they were in joint names, so they could still have potentially made that claim. So having that joint names policy gives the ultimate protection to developers, homeowners, anyone entering into a building contract.
Gotcha. That's so important. What about it? And it's subtle, almost in a way. So it's important you know this stuff, and don't take this as a training session. By the way, folks, if you listen to this, take this as ideas and thoughts that you need to reach out and speak to someone in insurance. Hopefully, Josh down there at insurance desk. What if I just touched on it just now? My preference for my students is to remain the developer, remain the CEO of a development company, employ a fixed price lump sum contract under JCT, and get them to go and deliver it. But there are obviously some students I do have who run their own construction companies, want to deliver their own projects, build their own companies. What about if you're a main contractor? How does that insurance makeup work there?
I suppose it's a little simpler because you're only relying on yourself as a property developer. You're taking on that main contractor role. So what you would need to do is make sure you are taking that contract works cover out. Whereas if you've got a JCT, you could potentially rely on the contractor having their policy and needing an extension just for you. If you're doing it yourself, you would need to take that contract works policy out. And that's really key, because although you might be appointing bona fides throughout the whole job, you're not picking up any tools whatsoever. You can't rely on the bona fides to cover.
What's a bona fide for those that don't know?
So a subcontractor, so an electrician, a plumber, a professional contractor that you don't control on site. They will come and do the job that you require them to do.
Yep.
So
that's quite rare for a subcontractor, isn't it?
Well, yeah.
Come and do the job you require them to do. Bit cynical, I know, but carry on.
But also there's a whole topic there between labour only, bona fide. What's the difference? But going back to the...
Well, hang on a minute. What do you mean, what's the difference? You can't ask me that question. What is the difference? Because we want to know, don't we? Anyone that's listening to this, what's the difference between a bona fide and what else did you say?
A labour only.
Labour. What's the difference between that?
Usually it's master-servant relationship. So if you've got someone on site who's using your tools and your guidance, they would be classed as a labour only contractor. Bona fide, very much professional. They will come on site, their own tools, and they will work to their own devices. So quite an important difference, because if they fall in the labour only bracket, you're going to need to look at some employer's liability cover. You're going to be responsible for that person whilst they're working for you.
Wow.
Whereas with the bona fide you don't take the employer's liability.
So the whole health and safety thing really comes in there. Oh, that's quite important.
So if you're contract managing, got that additional responsibility on top of the contract works cover and any existing structures you might have already.
So forgetting, folks, if you're thinking about project managing your own projects, forgetting whether you've got the ability or not, and probably most of you haven't, okay, you're ending up in a lot of responsibility with these various types of labour subcontractor work, which is going to be quite important, isn't it?
Massively important. Then you bring in CDM regulations, Building Regulations Act. You've got health and safety responsibilities. Are you the principal designer? You've got a lot more responsibility. Right. You need to look at ensuring.
Let's pick up that one, because that's an interesting one. I mean, obviously, as a developer, we have ultimate health and safety responsibility for the project. But if we insure a team and a main contractor, we don't become this principal designer. But you're saying, actually, if we're going to engage with these trades ourselves and project manage it, we could become the principal designer. What's the implications of that, and particularly for insurance?
For insurance purposes, you're going to want to look at trying to cover any potential issues with not abiding by those regulations. So without going into those regulations that I probably don't have the expertise to go into, is the fact that you will have a lot more responsibilities for health and safety with lots of different contractors that will be on site. So that is going to broaden your requirements and your expertise. So you're going to then have a potential insurance risk there. So if you fail in your CDM or your health and safety regulations, there could be prosecutions, there could be criminal prosecutions. So you're going to need to try and protect yourself as a director. And that is another key or another added element that you potentially might not need should you go down the main contractor route.
And what we're saying as well, so apart from the fact you can go to prison, okay, if you screw this stuff up, the other thing we're saying as well is if you don't, in that role, maybe you attract, and you didn't know you attract in this principal designer role, and you fell in your duties to comply with the CDM regulations, and ignorance is not a plea, could that mean your insurance could also be invalid should there be a problem because you haven't fulfilled your obligations?
The director's policy will look at protecting you up until the point where the investigation is finished. It will never pay for fines, and it will never pay for deliberate acts.
Now, what about if there's a problem, we don't manage health and safety properly, someone has an accident, they knock half the building down at the same time, and so I've got an insurance policy that needs to cover the problems on the building, the problem that someone's had a terrible accident, but I didn't do my health and safety. Does that mean my insurance company come back to me and go, well, hang on a minute, you should be up to speed on this stuff?
Not necessarily. If this is the deliberate act, then absolutely. If it was... there was an accident or something has been missed, then there will be some protection there if you take the protection. But what if you're just ignorant to the fact that you didn't know how to do this? Okay, and I know from the HSE, Health and Safety Executive, ignorance is not a plea because you're deemed to have found out or employ someone with responsibility. But if you've taken on that responsibility and you just said, I'm not bothered with health and safety, so it wasn't a deliberate act that you've done something physically wrong, you just weren't genned up, could your insurance backtrack away from that? Yeah, they could. I mean, it is reckless, isn't it? And it's just showing
pretty reckless, yeah.
And if there's no case for defence, they're not going to defend you. You're going to be prosecuted. There's no point in them investing the time to defend you. So there is potential if you're completely clueless, you're just going into it. It's like driving a car without a license, isn't it?
Well, I'm sure people out there have done that. And of course, I bet a few of you become a cropper.
And it's just too dangerous. It's too dangerous. It's not like with your potential motor vehicle that if you're not worried about it, you can write it off a couple of grand. This is people's lives, investments. It's so important to get right. So if you are going down that principal designer main sort of construction management, which I know you don't advocate, then be cautious.
Well, for all the right reasons. Types of cover. Can we expand on, is there different types of cover we should be thinking about?
Yes, there's lots of different types of cover if you've got an existing structure in place. Because then you've got to look at what levels do you want to insure, bells and whistles, or really restrict it. Contract works tends to be a more basic all risk policy. They're quite similar. So they're the two sort of key covers you'll take on works and existing structures. Going outside of that, then yes, if you're doing a new build, you need to look at your warranties. So that's going to be usually a 10-year, now looking to extend to potentially 12 years, 12-year structural warranty.
Yep, yep.
And then you've got potential bonds that you could take. So I mean, they are quite complex, but you can take performance bonds, surety bonds against yourself and the contractor if they don't fulfill the construction project. So there's lots of different things you can protect yourself.
Going back to the structural warranties, is that something that you arrange and can provide at the insurance desk there?
We absolutely can. Yeah, we've got lots of markets that can do structural warranties.
That's really good, actually, Josh, because I know a lot of people are often saying who's great for warranties, but you can go out to a number of suppliers in the market and get some really competitive quotes.
Exactly that. Yeah. So we're not tied to any one particular provider. So yeah, we can go out and get different quotes. Or if it's more suitable, so it could be a conversion, not a new build, you can get a PCC, so you can get a professional consultant certificate.
What's the difference of that? What's cheaper, I'm guessing?
Cheaper. Yeah, cheaper. So they're giving you a professional's backing, basically. They're giving you a certificate that it isn't going to have problems. But the implications are lenders may not accept that.
Is that insurance backed? It's not, is it?
No, so generally not. So you'll get a PCC, but a structural warranty will be insurance backed. That's why they're just much more robust.
Yeah. And so a certificate off of a consultant, if there was a claim against that, would be reliant on that consultant being in business and claiming against their indemnity insurance.
Yes, yeah, in that sense, exactly.
I guess is going to that I know that has got potential complications to it. So really, we want a structural warranty on this building. What about if we're putting a structural warranty on a building, or we'd like to? But I had this question literally this week, funny enough, actually on my Q&A with last week with my team, and this question came up, and it said, "But I'm doing no real structural alterations in the building. Can I still get a structural warranty?" What's your thoughts on that?
You can get structural warranties for conversions, but usually you'll do it if it's a commercial to resi.
Yeah.
You're changing the use. So the individual leaseholders, when you're selling flats, the lenders are going to want to see that there is structural adequacy there because it's now a residential dwelling. So that's when you look to do it, even if there's not really any structural elements. It's hard because you don't know the end lender, do you? You don't know the end requirement, because a lot of developers, let's face it, they don't want this cover. They're taking it because they have to have this cover to sell the property.
Yeah, because the mortgage companies are looking for it, aren't they?
Exactly.
And in the scheme of a development, I always say it's not a big deal. You know, if you can provide that and you've got a buyer looking for something with a warranty and one without, well, they're going to come to you, aren't they? You could
take a chance, but retrospective warranties are very costly. You're paying so much more, and they're quite complex, and the market's so small. You pay through the roof.
Yeah. But they better get in early for that. Well, Josh, I hope people do reach out for you for warranties. A lot of our existing students I know watch Open Door, and you're always asking me for warranty providers. Well, here I'll reach out to Josh, and he can help you there. You mentioned lenders. Now, we talked about named people on the insurance. Well, do the lenders play a part here, Josh? Because the lenders are putting up all this money for potentially 70% of the purchase of the building to convert and 100% of all the development costs. How do they interact with this insurance?
I don't want to upset any lenders on this conversation, this podcast.
Go for it.
But they can be a right pain in the arse. They really can.
Harsh. Did you say lenders can be a pain in the arse?
They can, and this is for insurance purposes only. I'm not even talking about the other parts of the deal. So I don't know what other issues they can cause. But as far as the insurance,
I love them. They're great.
I mean, look, if they want the requirements, you kind of got to do it. They're the ones stumping up the money, so they, in essence, do have the say so. But the annoyance is that they tend to do it last minute. And the insurance is pretty much the last thing that needs to be done. It's like, oh, by the way, have you added that co-insured clause in? And
what would be a co-insured clause? That would be the lender insured as well, would it?
Exactly. So the lenders will have generally 3 different ways they'll look to have a security on an insurance product. They'll go for a simple note of interest, which isn't a security at all. It is nothing. The first loss payee, and that would allow them to sort of facilitate claims over a set limit, generally 50,000, or they'll go for a co-insured, which means they are a joint composite policy holder and they can deal with any claim and they can facilitate the policy. The final one would be a non-invalidation clause, or non-vitiation, they often call it.
What does that mean?
So it means that the insurer will still have to pay the lender if the policyholder's failed with any conditions. So say there might be a 7-day inspection clause. The policyholder hasn't done that. So normally an insurer may look to either not pay out or reduce claims, but they cannot do that against the lender. They still have to pay the lender in full. So it's pretty much a condition-free policy.
So that's sort of gold standard type stuff.
Gold standard, and there's hardly anybody that wants to do it, purely because it is nearly a condition-free policy. It has massive cost implications on the client, and they're not easily sourced. So it's, again, last-minute jobby, really difficult. So it's trying to get lenders. It might not just be lenders leaving it to last minute. It could be a bit of, look, it's an insurance product, we'll leave that to the end. Try and get it in early.
I hear you backtracking now. You dissed lenders just now. Now you're backtracking and saying, oh, by the way, it might not be you. It could be the developer. You said it was the lender. So just
I have to deal with them too. This crops up too many times. So it's kind of, sort of a nuisance of mine.
Look, I tell you what, any lenders that's listening to this, and I know there will be, Josh says, just get your act together. I mean, that's all it is. Just get your act together and let us know what we need in our clauses. Whoever's delayed this, okay, what we're saying is this is so important to get this right, because these lenders are going to call the shots. And if that is last minute, potentially because you as a developer didn't read that, or your property lawyer didn't point that out, you're going to get hammered there. So I guess this is where we have to bring you in early, don't we, Josh?
Ideally, and that's not just so I can have a little bit of time to try and find the best deal. It is purely for avoiding delays, because if you don't get that insurance schedule, they're not going to complete. So if you're thinking, right, it is going to be Friday, well, it might not be. It might be the week after, and it could have cost implications as well. So get it in early, get it approved, and you can press the button when exchange happens.
Just for new developers that start on their journey, and again, I know a lot of our brand new students, literally week 1, week 2, week 3 on the program, be listening to this, just started with us this year. Is it too soon to reach out and have an initial chat with you like now?
You mentioned it right at the start. We're relationship people, so absolutely not. We really want people to engage, and we work a lot with a lot of clients that purchase at auction. You might have done maybe some underwriting on it, and you think, right, I am definitely going to get this property at auction. Can you just run it through? Are there any flood problems? Are there any problems with insuring it because it's got X, Y, and Z? Well, no, just have a chat. We can get it ready. If it doesn't happen and you don't buy the lot, then it doesn't matter. At least you've got it already. So always get in early if you can.
Great stuff. Josh, we're pretty much run out of time today. Contact details. If people want to get hold of you, anyone in the company, what's the best way to do it?
Best way to get in touch with me, I would say email. So you've got josh@insurance-desk.com. Phone's already always available if need be. So 01296 329 616.
Just give those two details out again.
So we've got josh@insurance-desk.com, and then telephone number 01296 329 616. And then if not, just go on our website and you've got a lot more details on there.
And that's the insurance-desk.com.
Exactly.
Excellent. We'll put all those details in the show notes so you can pick those up. Please don't delay. Reach out to Josh. Hopefully today has demonstrated the complexity of what this insurance could be. The quicker you get in, the better. I mean, Josh loves this stuff. I don't know why, but he does. Josh, have you enjoyed it today?
Absolutely. Always a pleasure. Always a pleasure. And the time always goes a bit too quick.
Flies by, doesn't it? Absolutely flies by. Look, great content. Josh, thanks for having the time to come and spend with us today. I know you're going to come back and spend some time middle of this year in Birmingham with our students, so I know they're going to look forward to that. So, Josh, thanks once again, and I'll see you soon, my friend.
Thank you very much. Catch you soon.
Now, what of that insurance, eh? Boring, you think. Well, you think, Josh Munt, insurance, that's going to be boring, but it's not, is it? It's interesting, particularly if you're on this property journey. And it's so important to get it right. Just a little slip of not having that right name on there, or you want to project manage your own things, the more responsibility you take on. And the fact, I mean, those insurance guys, you got a slating, didn't you? Unbelievable. But I mean, he must have been talking the truth. It was heartfelt. But maybe we've got to pull ourselves together a bit quicker. We don't want these late surprises. So, hey, this is about you as a developer, you as an insurance provider, if you're out there, you as a funder, all working together quicker to get this done. Hopefully you've enjoyed this today. Please like and subscribe if you have. Tell your friends about it. Lots of other content here on our YouTube channel at propertyCEO. If you're interested in a bit of free training, I've put some stuff together. It's available. 6-figure roadmap. It's about starting a 6-figure journey, earning 6-figure sums. If you fancy doing that in 2024, have a listen. It's propertyceo.co.uk/SFR. propertyceo.co.uk/SFR. But by all means, please reach out to us. Connect up with me if you want on LinkedIn, Richie Clapson on LinkedIn. Love to connect up with people. By all means, do that. And we look forward to seeing you soon. Thanks now. Bye-bye.